Brilliant. Well, to those people who I guess who are just joining us, welcome to this of our first Social Investment Scotland Raising Investments. Today we're looking particularly, I guess, at food and drink, but from a services perspective rather than necessarily a products one. And we'll be delighted today to be joined by Fiona Allen and Jim Saunders from FlyCup, based up in Inverurie. It's good to have you with us, so welcome. We're going to hear much more about what FlyCup do very, very soon. We'll be handing over to Jim to talk us through that. And Fiona's going to be talking us through the investment journey that FlyCup went through in terms of raising investment for their enterprise. So it's a really interesting story, and I guess one that you'll see was achieved, I think, through sheer grit and determination and really persevering. And I think that's what we really see with a lot of our organisations. The thing about social goals, I think, is it really pushes people forward to make sure that they're achieving and wanting to make that difference. And then the other people you'll just see on our screen, we're joined as well today by Toby Sanderson, Community Shares Scotland. Hi, Toby. Toby's going to be joining us towards the end of the session, looking at the community shares model, and again looking at some case studies relating to this kind of sector approach from a community shares model. And we're also joined by our investment manager, who's going to be taking us through, or may join in terms of some of the questions and come back on that. So welcome. Welcome today. I'm going to just crack on and start just going through the slides. So I'll show you what we've got coming today. It's like getting a sneak preview of the end slides. So like I said, we're going to be joined by Fiona and Jim from FlyCup. Just a little bit about Social Investment Scotland. I have put the links. What you'll see as we go through this slideshow today is wherever you see the video link symbol, there's some links to some bits of video clip for further information. So if there's anything you want some more detail on, those video clips should help answer some of those questions. So that just gives you a bit of a background into the latest of Social Investment Scotland's strategy, our building an impact economy. And over the last, since 2001, we've invested over £80 million across over 400 organisations in Scotland. And we're also proud that we do a lot of business support work as well as the investment. So we kind of see ourselves as part of this ecosystem, which is the big map you see to your right. And there's lots of support out there for social enterprise, and I'll touch on a little bit of that towards the end of the session if you're looking for more help. So today's session, I'm going to just take us through a bit of a run through, introduce the concept of social investment and how it can be used as part of a wider financial mix. We're going to look a little bit at the social investment landscape in Scotland, and then we're going to, after a short time, just hand over to Fiona and also to Jim from FlyCup, and they're going to talk us through their organisation and their experience. And then we're going to have some time for some Q&A, and then I'm going to take us through some of the next steps and actions, what we mean about getting ready for investment, how we might start to look at how you might find a partner to invest in you, and how you might look to make an application. And then we're going to hand on to Toby. So first of all, social investment, it's a term that I guess gets used quite a lot. And it can tend to be all encompassing around a number of different forms of finance. And I've put a few of the kind of areas here: loans and blended finance, community shares, social investment tax relief. And then we've got some other initiatives that come under in terms of social impact bonds, looking at equity investment within our social enterprise. Generally speaking, albeit it's a much broader tool, when people really talk about social investment, in essence, they're often meaning loan finance within the social sector. And that tends to be the majority of what social investment will refer to. And that's what we're going to concentrate on today with the extra session on community shares. I have put some extra links about things like social investment tax relief as we go through here. And you can also look up some more details on that after this session. So social investment's used in a number of different ways in our sector, and I guess the three key ones really are buying an asset, providing working capital and bridging grants. So you'll hear from FlyCup about how we worked with them to help them secure their premises. So to some degree, they fit that buying an asset section of our webinar today. But many others, if they've got contracts with local authorities for bits of work, or they're perhaps more product orientated, they may have contracts for supply, contracts for services they're going to deliver, and they need the working capital to enable them to do that. So that's another key area that we use social investment for. And then the last one I put on there is bridging grants. And again, just more generally, that tends to be if people have got things like European funding and it is paid in arrears and you need the money to start doing the work. We look at things like bridging grants to enable people to get through that gap. So really, social investment is there to help organisations invest in their enterprise, perhaps grow and scale their enterprise, or diversify what they're doing a little bit. We've got, again, a couple of video links here just in terms of some short clips on particular comments around lending money for buying a building or lending money for products and services. And I would encourage you to take a quick look at some of those. So where does social investment fit? It's not right for every organisation in the social sector. It's not going to be applicable to some. If organisations are predominantly reliant on donations and gifts, or they're only looking at raising funds from funders with specified outputs, social investment probably wouldn't fit them. And that's really because we're moving along that spectrum at that point from asking for money to earning money. Obviously, social investment refers to loan finance, which means it needs to be repaid. And you can only repay money back if you've earned money. And if you've tended to just have it from donations or funders, it will already have restrictions that mean that you're not able to do that. So social investment really comes in at that point around perhaps service level agreements, access to working capital. It might come in if you have specific purchases in a limited market, or as we'll see with some of our other raising investment sessions, also if you've got wider consumers and you're on the open market. But the key thing is that earning income. There's perhaps a few things, and when we send out the slides after this event, I've put a lot more detail about some of the perhaps benefits of funding versus the benefits of looking at loan finance or earned income. But I just wanted to touch on a couple of those just in this introduction. So perhaps the first comment I wanted to make is obviously the cost of finance and funding. So obviously one of the key barriers we often get told in terms of being something that stops people looking for loan finance is, of course, you have to pay it back. But I guess the question I always put out to groups is funding always free? And I always think that's worth kind of bearing in mind as you're looking to raise finance for your project, which is why I often talk about looking at raising money across a blended approach in terms of different forms of finance. Then we kind of look at things around ownership, control and flexibility. So obviously you'll know if you're experienced in applying for funds that you're often needing to meet very particular outcomes and targets. You'll perhaps have to be following certain guidelines around capital and revenue split, around what can be used for core money, what can't, issues around project funding versus organisational support. So really, again, the mix of finance will often depend on what it is. If you're going to be running lots of shorter projects and they're very, you meet those funder outcomes, then that can really fit. But actually, if you're looking to really grow a business and follow perhaps a business plan and targets and keep a focus, then you may want to be starting to look at social investment as a way of bringing in a bit more flexibility. So one of the key ways I often talk about how this is demonstrated is if you're applying to a funder, you're following a particular application form, you're following their outputs. If you're applying for social investment, and this is across the board, it will be based on your business plan, very much your focus, and we look at how we fit with you rather than you looking at how you fit with us. It's a slight difference, I think. And then I also draw people's attention to issues around reporting and systems. So again, those of you very familiar with the funding environment will be familiar with quarterly reports, end of grant reports, social impact monitoring, and again, it's slightly different if you're looking at the investment field. That's not to say that we're not interested in any reporting at all, but perhaps it takes a slightly different slant. We want to know that you're making a social impact. That's really important to us. We're very much about social impact and finance, but obviously we will also be making sure that we are keeping regular checks in terms of your financial position and fitting with you on getting those reports and keeping that relationship really through our investment managers. So again, it's just slightly different ways of looking at things. Which is why I often tell people when they're looking at social investment, is it really an either or? I very much kind of see social investment as a fit of part of a blended finance model for many organisations. They may be using funding to help them meet some specific social impacts, but social investment to give them perhaps some of their stability, to help them build up assets and to grow their business side of their organisation. I get people thinking about their approach to risk. And while when we're looking at interest rates, we think of, I guess, risk and reward in that more traditional financial setting, I think there's also a sense of risk within the social sector. Some people are nervous about risking their social outputs. Some people feel like they've got quite ambitious social outputs they're trying to make, and actually taking a risk on a slightly bigger initiative will enable them to do more. So it will very much depend on your board, on your management team, in terms of kind of what it is and where it is that you're trying to get your particular enterprise to. And then I just put in a last little comment really about, has the landscape changed? So I think when I used to run this session before, I used to talk about perhaps things like, has austerity kind of affected organisations? Is there less funding around? I actually used to say that I didn't think there was less funding, but there's certainly more competition for it these days. We're seeing a really growing social sector. But I think it's interesting to consider how the landscape's perhaps changed even post-COVID. It's actually been a lot harder for some organisations who had earned income as COVID's hit, whereas those perhaps in receipt of funding felt a little more secure. But I think it's going to be really interesting and tough, I think, to see how moving forwards, what the constraints on funders will be, as many resources have gone towards COVID, and getting that balance of kind of customers coming back. And it's going to be interesting to see again how local authority budgets might change as a response of having to deal with COVID. So I always get people really think about how your landscape has changed in terms of where you raise finance from, whether that's earned income, funders, or contracts. And again, when we send out the slides, I've highlighted much more detail around advantages and disadvantages of various forms of income. And I've particularly included a video link around personal liability fears, because we know from our experience in this sector that it's often trustees in organisations that are a lot more nervous, fearing that actually, to put it crudely, their house is on the line if it goes wrong. That's not the case. There are obviously rules around OSCR regulations and companies' house regulations that board directors need to be aware of, but as this video says, from a CIS perspective and other social investors' perspective, that liability question isn't quite the problem it's often perceived to be. So just quickly, who are the social investment providers? So there will be social organisations out there who can get money from high street banks, but they tend to want to take security, they'll want a proven model, and they're probably looking at higher value loans. And then moving across that chart, the social investment sector really developed because many social organisations were finding that when they went for mainstream finance, the answer they often got was no. So it was really set up to try and help social organisations who got that initial no to still find a way of raising money. And that's, I guess, again, what that video link kind of highlights in terms of why we need, I guess, non-bank providers, not your traditional kind of high street banks. But I think it would be wrong for me to say that it's again, this is an either or. So we will sometimes find that the bits SIS are able to do might be working in conjunction with some of the other high street or social banks to plug gaps. If some of it was secured and there was a small element that wasn't. So it's very much will depend on where your organisation fits in terms of how long it's been going, track record, relationships, and getting that mix together. So SIS will do lending money from £10,000 upwards. We will fund things at an earlier stage, and we will fund money that is unsecured. And again, I've just put on this slide a little link to goodfinance.org.uk, where you can find lots of information about some of the other providers, Resilience Scotland, Big Issue Invest, Social Investment Business. There are a lot of organisations out there that can provide social investment too. This is just a last little slide before we hand over to Jim and Fiona, really, in terms of just some of the terms. So when you look at social investment, it will tend to always be based on fixed interest rates. Our experience is that organisations in the social sector are much more easily able to manage loan finance when interest rates are fixed and they know what payments are. I've already touched on the fact that we do different types of loan finance. So we do short and long-term loans. So those looking for bridging loans, that might just be a short period, which for us is probably anything up to that 2-year mark. And then we've got the longer term loans as well. Generally speaking, up to kind of that 25-year mark would be around the longest that we would do. And again, I'm just touching on that point again around the no personal liability. So yes, we may look to take security, but we don't need to. And that's just where some of the calculations around interest rates come in. And I guess the key thing that's also can be different around the social investor, and we'll come on to this a little bit, I think, both in hearing from Fiona and in terms of the final slides, in terms of considerations, is you tend to find this is much more a relationship-based approach with a social investor working with you. So we talk a lot about kind of patient terms and the ability to kind of put payments on hold if situations change, to refinance as we go through. And that's very much that conversation with an investment manager as you go through, and keeping that flexibility can be really important. And we'll come back to that towards the end. And I think Fiona will probably touch on that as well when we talk a little bit in terms of the relationship with the investment manager. So I'm going to hand over to Jim and Fiona now in terms of taking us through FlyCup and their journey, because I often think the learning can really come from organisations who've been there. So I think, Jim, you're going to start by just talking us through a little bit about FlyCup.
FlyCup catering started 20 years ago, back in 2000, and the project evolved from a day centre activity where service users at the local authority day centre were involved in making what we call fine pieces, which is nice tray bakes, and a fly cuppa. And a fly cup up here in Inverurie is kind of an informal cuppa where people go off for a quick cup. So a quick cup and a fine piece, and that was made and delivered to local people at the day centre. So from that, parents and the local authority got together and discussed how they could move that forward. And then the charitable organisation was created from there. And it started in a small premises, which is not far from where we are now, with a food production kitchen and a training room. And the trainees were funded through the local authority to deliver or to accomplish skills to become more independent, and also to develop vocational skills. At that time, there were 7 trainees that started, which then increased to 12 trainees. And there was some partnership working with the local college where Scottish vocational qualifications were delivered to the trainee group. It was always the vision of the board of FlyCup to aim to become a fully accredited Scottish Qualifications Authority centre. So that was always the vision back in those early days. From there, the outside catering and the bakery trade evolved, and there was links with local retailers and local businesses with the provision of bakery products and also outside catering and sandwiches and fruit at lunchtime. From there, in 2012, the organisation had the opportunity of moving to the premises we're in now. And these premises were leased, and it involved a 40-seater coffee shop. Prior to moving to the building, a church hall was used to deliver the food and beverage service on a Wednesday. So this was quite a step forward in moving to premises where a 6-day coffee shop service could be delivered. And that would include a breakfast service with morning coffee, a lunch service, and afternoon tea service. So this was quite a milestone to move forward with this. And this also allowed food service training and food preparation training and bakery production training. More trainees came on board, so obviously the team increased. And then in 2014, there's a first floor to the premises, and FlyCup Catering got the opportunity of leasing the first floor as well. And this allowed the offices to move upstairs and to have the opportunity of having a meeting space that could be leased out to local organisations to use the space for meetings and conferences. And then moving forward, in 2018, funding was granted to install a passenger lift to improve or enhance the facilities up the stairs in the meeting space. So a meeting space for a maximum of 50 was created, and also a partition where we could partition the room off into 2 separate spaces, one catering for a maximum of 12 delegates and the other catering for a maximum of 25 delegates. Toilets were refurbished, and there was a small kitchen installed up the stairs. From there, a real demand became apparent, and local commercial organisations, social enterprises and charitable organisations started to show interest in using the space. And this allowed us to deliver a catering service on site, and also functions at the weekends and in the evenings. Also, in 2019, the organisation was involved in delivering wedding catering. So the outside catering business really increased, and it was quite an exciting time because we were allowed to support the trainees with delivering a wedding food and beverage service out at local venues. In 2019, FlyCup Catering became an accredited ASDAN centre, which allowed the training team to deliver accredited qualifications and personal and social development awards. And then in 2020, we realised our vision, and we became a Scottish Qualifications Authority learning centre, delivering SVQs in hospitality service and in professional cookery. So a real progressive journey throughout the 20-year period. So this slide here shows the meeting space that's been set up for a function. So through the time, we were able to achieve funding and purchase new furniture, up-to-date information technology on television screens. So really the offer that we can make available to our client base within the community is a real quality service. And that's really appreciated, and it shows the level of feedback, or favourable feedback, that we receive from our customers.
Thank you, Jim. It looks a great space, I have to say. So.
Okay, so that's kind of a bit about who Fly Cup are, and obviously we're here for our trainees, and that's our charitable purpose, is employment skills and training towards independent living. So having got the whole of this building, I think it must have been back in about 2016, we had financially, through our earnings and our contract with the local authority, got to a point where we almost didn't need grant funding, which was a very, very pleasant, special place to be for an organisation, because it's quite rare. But being tenants, we find slightly taxing at times. I have to say we've got excellent landlords, but just at times you think, wouldn't it be nice if? So I think it was probably about that time we first got involved with yourselves, looking at different possibilities for, if we were to purchase a building, what's the right way to do that? What kind of funding should we look for? Should we go for just a straight high street bank loan? Should we look at social investments, or what? So I'm sure that's when Teresa first came up and saw the building. And then, and I think it was probably 2017, certainly 2018 when the work started, so it's probably 2016-17, we heard that leader funding may come to a halt, and it was strongly suggested that we should apply if we wanted to refurbish the building. Well, of course the board had slight sleepless nights about that, because why would you want to invest and refurbish a building that didn't belong to you? But, well, maybe we should do it because there's not going to be leader funding, and how are we going to get that again, because it was, you know, just too good a thing to miss, really. So that's when, as Jim said, we put in the lift to the upstairs so we could have disabled access to the meeting space, refurbish the meeting space to make it usable, because prior to that it had been one big, huge space. It really wasn't very nice, with a horrible, dingy little sort of kitchenette thing next to the toilet, which was even worse. So it really wasn't a very pleasant space, even though people were very happy to rent it out, just because there's very shortage of meeting spaces in Inverurie. So we went ahead with leader funding. We're fortunate enough to get that, and refurbishment happened, and we got the building handed back in April 2018. So that's part of the story. But then it's like, well, that kind of rather used up the reserves we didn't expect it to use, because as usual with every time you do any kind of building work, there's bits that aren't mentioned in the spec and you miss bits, and well, wouldn't it be nice to do that to a higher spec? So our reserves were somewhat knocked. So it's like, oh, and we'd already agreed with the landlords that we were heading towards purchasing, and they'd actually kindly fixed the price for us for a while to allow us to do that. And it's like, oh, there's pressure on, we really need to be doing this, what will we do? So more conversations, and that's where relationships with Teresa, who has the patience of a saint, I have to say, worked with us, looked at it, and we thought, yeah, we're going to go for this. Let's just go for it. Did the sums, the board were like, well, yes, okay, we'll go for it. And then maybe business isn't quite as good as you think it's going to be, so, well, maybe we shouldn't. So there have been an awful lot of board meetings with an awful lot of heartache of should we, shouldn't we? And eventually we said, yes, let's go for it. So all the work was put in place. We're starting to look at doing all the sort of due diligence you have to do to purchase a building. And we were due to, I think, to sign over last summer, when we suddenly thought, up to tax. Oh, well, we thought our previous treasurer put that place. Have they? Oh, no, they haven't. Oh dear. Right, okay, better do something about that. So that's put things back on hold again, get all that bit in place. Then, oh, hang on, if we're going to talk to tax, that means we're going to have to pay VAT on the building. We don't have enough in the reserves to pay VAT on the building. What do we do about that? Teresa! So lots more work to be done, and that was also then agreed that we could have not just the loan for the purchase, but you're talking about your bridging loans, so to have that to be able to sort out the VAT bill. And then, so that's, again, we're back on track again, so let's carry on towards the purchase, and nothing seemed to be happening around about Christmas, New Year, and we're like, what's going on here? And of course you just kind of sit back thinking, well, solicitors are doing what solicitors do, and they're taking their time, but thought, no, better follow this up. And it happened to be our solicitor had left the company, and nobody thought to tell us. So we didn't have a solicitor, and worse than that, the company actually pulled out of doing commercial sales. So we had to go and find another solicitor. So it's like, sorry guys, on hold again. Let this solicitor catch up. So that was all, got a new solicitor, he was fantastic, came up and saw the place, totally got what we were after, did all the work that he needed to be doing to be sure that he was making us sign the right bits of paper for the right reasons. And then guess what? COVID hit, lockdown, and the land registry closed. Like, okay, almost bought it, not quite. But we finally got there, and to be honest, it's been such a long journey, I've actually even forgotten what date it was we finally got the purchase through, but we did get there. So we now are the proud owners of the building, which I have to say is fantastic. And a huge thank you to Social Investment Scotland and Teresa, because without, as you say, it's all about the relationships, because without that tenacity, perseverance, patience, I'm sure it would never have happened. I think high street banks would have gone, we don't trust you anymore, off you go. So that's kind of our investment journey, which has been long and at times torturous, at times laughable, and finally we got there.
Very successful.
Yeah, no, thank you. I mean, you can see that. I guess that's where the pictures and the photographs at the start, you know, mixed with the kind of explanation of your journey, and you can see that kind of sense of the quality and the kind of venue that you were trying to create. That's just fabulous to see. I think it must be really rewarding having got to the end of such a, what feels like quite a torturous process and long process to now look back and see those photos, and actually what they represent is much more than just the kind of the chairs and the cafe as it is now, when you've been part of that from the beginning.
Absolutely, as I say, I mean, that's what we always say. That's where, you know, we are here for the trainees, and everything we do, we think them first. So it's like, what impact will it have for the trainees if we do whatever it is we're thinking about doing, and how do we do best for them?
Yeah, and did you have to do anything particular, I guess, with the trainees in mind in terms of looking at how you did the build or the kind of place you were looking for, or was that one of the reasons that actually really having that building security and trying to manage change moving forward was actually really important to you?
Yes, I mean, obviously the last thing that we'd want is suddenly landlords, because again, as you say, in the climate, you never know how things change. Landlords may want to sell up, you may then get a different landlord who either doesn't want you at all or is much more difficult. Because I have to say that the previous landlords were very forgiving, very supportive through the whole process as well. And even just as before that, before we even thought about buying, rather, were very good landlords and would come around if there's any issues. But for the trainees, it is that bit about security and also sense of place and sense of belonging. You know, doing the cafe down the church hall was great, and arguably at times there was more integration into parts of the community, but it wasn't ours. You know, we weren't in charge of our own destiny, and it could be very distressing for the trainees because we thought we were maybe going to be doing the cafe on a Thursday, but there was a funeral, so we couldn't, you know, and suddenly you're kicked out. So it's like, then what do you do today, because we can't do the cafe service? So that was partly moving here in the first place. And then it's that bit of security once you're in this building, is then actually it's that bit again, if you actually own it, then it's just that solid security of knowing we are completely now in control of our own destiny as best we can be.
Yeah, I mean, I guess that's what I was trying to touch on in the slides at the start, of that sense of ownership and control, and how you get that balance. And again, you know, thinking it through from a risk perspective. So the risk to you was that actually you didn't have anywhere to suddenly run the cafe from, when you'd already got to a point of, like you described your journey, getting to the SQA, being able to do all of that. That doesn't come overnight. That's a lot of hard work to get your business to that level. So actually, once you're there, what you want is a solid premises, and you want to be able to, like you say, be in control of that destiny moving forwards, having invested so much already. I was really interested, Fiona, if when you were talking, you talked about maybe in the early days you had funding, but then you were able to be in a position where you didn't need the funding anymore. And I guess a lot of groups, when they look at investment, would you say that funding was really useful in the early stages, and it was, or would you have looked at social investment earlier? But do you think you got the balance right in terms of, I guess, getting the model right, using the funding to do the test, and then looking for the social investment?
Yes, I suppose it's that bit about, as you say, about risk. So it's that bit of, if you can be a charity and you're fortunate enough to run a business that earns you income as well, if you can get to that stage where you know that you've got a good business model for that income, you know you've got a contract that feels as secure as anything can be with the local authority for for the trainees, if that can balance the books, what better place can you be? So then at that point, you then feel secure that you could do something like take on a loan.
Uh-huh.
But it is that bit of like, well, who do you want your lenders to be? So we did sort of look around the market of law, as you say, with high street banks, they suddenly call in loans on you because they have no compassion. They just want their money back for whatever reasons they have today. Is that necessarily the best way to go, even if we could have got a high street loan? So certainly that was the conversations back then when we first started looking for purchasing.
And did you look around in terms of other social investors as well, or just did you find out about SIS through word of mouth, or did you try other people? Was it that personal connection, or was it actually just that at that time there was less of an option and SIS was the one that you were comfortable with?
Back then, to be perfectly honest, it was our previous manager that I think had made the contact with Teresa. But I'd met her and I remembered her, if you like, so it was that had that contact. So when we're looking again and more seriously looking, it was Teresa that we contacted to say, do you remember us? Are you interested in us? And that's kind of where it led from, to be honest. I guess there's different potential combinations as to whether it should be all social investment in Scotland, should it be with another partner or not. So we had those conversations at that time. But it ended up being that social investment was the best way to go, just with yourselves.
Yeah, I mean, like I say, when we run these sessions, we very much, I do try to encourage people to look at different providers and get a sense of what they want from their provider, and I'll come on to that a bit at the end in terms of some of that. I'm interested in terms of coming back to kind of some of the questions around maybe boards and trustees and having the team with you. Was the nervousness around taking on a building, or was the nervousness around taking on a loan, or was it a bit of both? And perhaps could you touch on how you helped overcome some of that fear?
I suppose it was a bit of both, but it was more about the loan, to be honest. It was more about the finances. Because as I say, our reserves have taken such a hit, it's like, are we mad? You've nothing behind you and then taking on a loan that you've got to then service. It's like, is that really the way we should be going at this time? So that, yeah, how do we get around it? I think just through talking, to be honest. It's that relationship, back to relationships again, that relationship in the board. We kept sort of crunching the numbers and saying, well, what happens if, and putting different scenarios and just doing, I suppose, just the due diligence on that ourselves as well. Of like, well, what happens if we have X number of trainees, or what happens if we have X number of staff, and what can we change that? Can't we change that? What happens to trainee income if trainees drop? So it was really just lots and lots of conversations and reassuring ourselves that it probably would be okay.
Okay.
And again, the business income, because that was going so well as well. I think that was really probably what sealed it for us, is that whilst really busy for staff, it was pretty much manageable. So if we had that level of business, then actually we're all right.
You had the confidence. It gave you the confidence, I guess, because you had.
Yeah. And it's confidence.
How long would you say that you confidence in the team? Because it's all right. It breaks up a little bit. I don't know if it's my connection or yours. I guess coming back to that, I guess I'm always keen on that kind of trustee and board. What would you say is, because we'll touch on little bits about investment readiness and governance, and you talked about being able to have that sense of security. What would you, if you were describing your board of trustees and your management experience, how would you describe that? What kind of backgrounds are people from that kind of, I guess, gave SIS the confidence, but also has given you as an organisation the confidence to move forwards? Because I think that's what you can often get from a really good board.
Yeah, I think we do actually have a really good mix at the moment. We've got a background of health, business, a local business. One's a sort of more just a small individual business. The other one is a local retail business that two people are on. One is a younger person who just is very local, so knows a lot of local people. Is very supportive of the trainees and FlyCup, and has been for a long time. Health, social work's my background, and also business. So there's a fair bit of business knowledge on the board of different kinds of business. And then also parents as well, which is really important. So parents of the the trainees. So you get that voice coming through into the board. I think is really important. Because again, it's that bit about impact of, you know, what's our consequence of what happens if. So that was, I think, just having that whole picture. So you have the parents speaking from the trainee and family side. We've got myself coming from my knowledge of social work and the local authorities, of, you know, how they might view things, and then couple that with business and just local knowledge. And I say again, confidence of our team and our manager in actually delivering what we need to deliver, I think was really the whole picture that made us confident that we can do this.
Yeah, I mean, certainly, like I say, we look at things like governance, and we look at the staff team. It's really important that you've got that balance in those two, I think, to really, you know, for us to have the confidence as well. It's very much a kind of all having the confidence to move together that's important when we look at that investment relationship. Another question had come through my mind, and I'm just, how confident do you feel? I mean, COVID has obviously been a big thing. It affected you in terms of just even having access, or the building sale going through. How do you think it's kind of also adapted in terms of looking at your business now moving forwards? And have you had to then have conversations, I guess, or I guess even with SIS in terms of looking at loan again, keeping that relationship going? And has that been something that's been useful to do, or is that something that still needs to be looked at?
Where are we at? Well, very early days, it was a case of looking at what was happening, making decisions hard and fast. So unfortunately, immediately had to let go just over a third of our staff team, because trainees, very clear at lockdown, trainees were not going to be coming in, so they'd be locked down for who knew how long. All our business income literally fell off the cliff and went from whatever it was at to zero. So it was it was basically survival mode for the first few weeks. You know, how do we actually survive and make sure we can have a charity at the end of whatever it was, however long it was going to be. So those decisions were made really hard, fast, quickly. And then again, thanks to the team, very quickly then started saying, well, but we can still make income. We're food. In that respect, fortunate, we can actually still make an income because it's food, therefore food is essential. And put together afternoon teas. So would you believe the country cannot get enough afternoon tea?
Fabulous.
It's a real demand.
That's great. But it is that ability to, I guess, when you know your business really well and you're rooted in that community, is to be able to make that shift quite quickly. But I think it's the boldness of decision making, I think, and the speed. And I think that's often quite difficult for organisations in the social sector to do, because they're frightened of, I guess, letting down trainees. But it's always getting that careful balance of how do we make sure that we're there for the long term and not just trying to survive at maximum capacity for the short term. That's always quite an interesting way to look at things, I think, but not easy. Tough times.
It was absolutely tough times, and the team have worked brilliantly. And now looking at the other end, as you know, work hasn't stopped. We've actually got quite a tired team. I think they all could do the holiday, because having gone through the survival bit and let's keep some income coming in, it's now like, okay, now it's opening up again. So now we need to get ready for trainees coming back. And then, you know, with all the social distancing and the risk assessments and writing up all of those and making sure how we're going to induct them back, because it's a different place for them to come back to. So for, you know, when people with learning difficulties, this can be really quite tough for them. Coming back to no customers in the cafe, different way of doing the food delivery, not being able to come up and give people a hug when they come in the door. So we're going to have to be really careful. So there's been, again, a lot of planning, a lot of work put into getting ready for trainees coming back, never mind the public.
Yeah.
And again, it's on that we made the conscious decision that cafe is not opening at any time soon. You know, we need to be absolutely sure that we get the trainees back safely first. And rather concentrate on the business side will be still, yes, click and collect at the door, but not coming into the building and deliveries.
Yeah.
So again, yes, we're again talking about balancing that business model and changing business model along with what we must, you know, what we need to do for our trainees, because they come first, and their safety and our staff's safety come first.
Absolutely. I mean, I think that's always in the social enterprise sector. It's always that real balance of how you really keep the focus on the social goals, which is in essence what most organisations are set up to do, but trying to make sure that you keep that commercial viability as well moving forward. So yeah, it's not an easy balance to strike often. I was interested just to pick up a little bit about the funding mix, because you were talking about the leader funding, and it was interesting to me that actually there was a real conscious decision not to want to take on leader funding that in itself could go to waste. And actually, I think sometimes when people are using funding, there's almost a sense of, well, we'll use that and it's a project and well, it'll just do what we need it to do for now. But I spoke in the beginning about that funding and finance mix, and I was really interested that your approach to leader was it was really essential to do that for the refurb, but actually you wanted to make sure that that wasn't just accessing money for the sake of it, was the impression I got.
Yeah, I know, but well, it's that bit of if for whatever reason the landlords have seen us do all the refurbishment, oh, thanks very much, get out. That's not quite the purpose of either what we wanted to use it for, nor free public funds. So, you know, doing up a private building with public funding felt a bit odd. And certainly wasn't the way around we would have wanted to do it. We certainly would have wanted to own the building first. Which is why we did do that deal with the landlords of, will you hold the price, and yes, we will purchase once we get to the other side of the refurbishment. It's just that we almost fell down on that because funds weren't there. It's like, oops. But we got there. But yeah.
Yeah, it's back to that relationship, isn't it?
Yeah. You're breaking up on us.
I mean,
I can't hear you.
Oh, apologies. My reception's normally really good here. It's I guess that's why that balance for me of the kind of trying to get people to think that you're not just kind of applying for funding and you're not just applying for loan finance. So from a CIS perspective, again, often we find that if people have got some element of the funding using that more traditional model, it gives us the confidence. And actually there's something about the confidence of loan finance and the financial scrutiny that then funders get back. So I think there's something around that that's, I know organisations sometimes find that as a consequence of having had loan finance, actually more funders want to then give them funding to some degree, because they're like, we know they've got good financial systems, they're managing money well, because had they not, they wouldn't have got through the due diligence with a social investor. So it's quite interesting to me how those two really can work together.
Well, we'll see on that, because we haven't actually applied for normal sort of grant aid since the purchase, so we'll find out that one out. Come back to you on that one.
You'll have to let us know. I just think it's the systems, I think, and the scrutiny. Yeah. And again, when we talk about being investment ready, it's I often say that small organisations, and sometimes I find large organisations, are still used to trying to manage everything on a spreadsheet. And actually, when you start to kind of really look at loan finance and running things on a much more enterprising level, you need a more robust financial system. You really need to be understanding your cash flows in much more detail. And I think what you tend to find is for those organisations that have just had a reliance on grant money, and particularly if they've avoided European money, is it's a very different scenario managing spending a bulk of money and then another bulk of money compared to trying to manage money coming in and out in the much more traditional business sense. Mm-hmm. So it's always interesting how the finance systems work. I just wondered, I'm just conscious just of questions and them coming through a little bit. I'm just going to minimise so I can see if there's any questions that have come through on any of our functions or into my chat. Okay. So I wondered if you could just describe a little bit about the process. And I know we're going to talk a little bit about the process of coming in for loan finance in the beginning. Was there a nervousness about picking up the phone? You said it was an introduction that you first had, which probably made it easier. But did you find you had to do things differently applying for loan finance compared to a funding? What were the things that you were asked for typically? What were the things that held you back? Or did you find that you had everything pretty much ready and good to go?
I suppose because you say because we run business, we've therefore got a financial system that can give you the answers to most things. The bits that we probably hadn't done as much in the past would have been projections forward. We tend to look on where we're at and where we're going in the shorter term, but doing sort of 2 and 3 year projections forward is like, whoo, don't know where we'll be in 3 years' time. Like, oh, that's a bit new. So yes, it's a huge learning for me. Obviously, that we've got a lady here who does our finances, and she was fantastic. So I just kept phoning her up and saying, "Can I have this now, please?" Or what happens if we change that? But yeah, the process was in that respect different of looking forward for projections. Otherwise, it was just the things we'd normally have in financial systems for running a business.
Yeah, I think, and you're right. I mean, certainly when we're looking at loan finance, because it's got that element of repayability that's critical, we're very much about the future forecasting.
Sure.
Whereas I think if you're used to applying for traditional grant funding, it's can we have a copy of last year's accounts, and what's your project breakdown in terms of costings? So it's a very different way of thinking about money within your organisation that I guess for people who've got that enterprising background, is much easier for them to adapt to, but for those that haven't, I think they do find that a little bit harder in terms of really trying to work out the cash flow projections rather than here's the report to our trustees based on last year's spending.
Yeah, certainly when I do in my day job, I work with a lot of charities, and I know a few that would have really struggled to put together things you were looking for, as I say, but because of the business setup that we have here, it wasn't so different. But yes, I can imagine quite a few charities would have to do things quite differently before they'd be ready for looking for something like a loan.
Yeah. How would you, and just last couple of questions really, in terms of a confidence, and maybe to Jim a bit more really, from having that confidence of the board behind to really push your organisation, has that changed how you've looked at things from a management perspective and kind of the ambitions for the organisation for the future?
I think that the regular meetings and support that myself and the team get from the board is excellent. We have a really good reporting structure, and what I do is I present an action plan to the board. So the board are very much aware of where we are with various parts of the project, where we're going, who's responsible, what the target dates are, and any income generated, what income would that particular part of the project generate, also what are the costs of that particular part of the project. And I think that's what's really helped us, certainly in the current climate, because we're able to look at different business strands and kind of think out the box. Because we had to really go and tap into the kind of delivery market and take food to people's doorsteps, which was very much well received, and then think about how can we then take payments for that. So then we had to implement a remote payment system, because we had some of our admin team working from home. So it's very much it's the excellent communication between the board and the operations team that really make it all happen. And the board also support us with different fundraising initiatives. If we're doing anything, in the evenings to raise additional funds or specific projects, everybody likes to get involved. So it's the togetherness as well that really makes a difference.
Yeah, I really get the sense, having spoken to Fiona, that it's very much it's the board and the staff team coming together that I guess have just got through the tricky, almost the journey of the investment, which has been kind of long and at times drawn out as you've hit obstacles, but also getting through COVID as well, and that kind of sense moving forwards when you've got that good trust and confidence. And I think, like you say, that absolute social goal that you don't want to let trainees down, it really brings everyone together in terms of making sure that everyone kind of keeps their eye on the ball moving forward. So it's really interesting. I mean, I often end up, as one of my last questions, asking organisations about what they're planning to do next. But this is such a a relatively new journey for you in terms of having just gone down the investment route, that it would probably be a bit much to kind of go, oh, what's next? It's actually what's next at the moment. Literally getting through the next few months and adapting to changes, I think, more than anything. If I'm not, unless you've suddenly got a big plan, but I suspect it's
We've always got
it is just
plans.
getting
Now we're in the
Excellent.
building.
excellent. So perhaps then the last question is, what difference do you think now owning the building will have for your organisation moving forwards?
I think it is that, I'm saying, well, now that we own the building, maybe we could do. So it is that bit of, you can then start to look at the next part of the vision, because to be honest, this year has actually concluded kind of the vision that I've had since I joined the board back in 2006. So 14 years on, we've achieved everything I'd hoped, which was to have our own building, which ideally we would own, with a great staff team, with a good lot of trainees that are all working towards vocational qualifications that we are the accredited centre for. So having just got that accreditation beginning of the year, purchasing the building in May, whenever it finally went through, it's like, oh, we better reset vision time. So I think it's press sort of restart. So
Yeah.
Reset button, and yeah, it is that planning now. It's that, we've got the solid foundation. So actually, as a whole team, what next, apart from, as you say, survival and getting through the other side of COVID?
Yes, it's not a task to be underestimated for sure.
No.
But I'm just thinking, is there anything else that you just wanted to add, just as some top tips maybe for people that are looking at raising investment in this kind of sector? I've got a few that I've pulled together at the end of the presentation, but I think it's always good to hear straight from the horse's mouth rather than people like me.
What would I say for the process? Keep talking. And it is about communication. And on the risk side, I think it is just do your homework, do your risk assessments, and do those sums 2 to 3 times, 10 times more over, just to be reassuring yourself, the board, the team. Because if you know it off by heart, then it's a lot easier to have those conversations with an investor. And I say for me, it's the whole thing again. It's the communications and the relationships, and having that trust in, let's say, your staff team, that they can deliver, and the person that you're working with on the investment side, that we can actually do it together.
Thank you. I mean, that comes across really strongly to me. Often, again, when we do these sessions, I don't know whether it's because we've done them kind of in physical event spaces rather than just Zoom, but they've often been with kind of the general manager. It would have been Jim coming along, and I actually think there's something really valuable in getting the board member and the person that manages the project together to talk about this journey, because you can't go down an investment route without both your board and your senior team really wanting to do it. So I think it's been really valuable for us having the two of you join this session today. So yeah, that really comes across. So I guess that's a thank you from me for joining the session and answering some of the questions. I've got a few little final bits around social investment I'm going on to, which you're happy to stay for, and you're happy for you to hear about community shares, but I'll just crack on with some of the other bits. And just a big thank you for your time and inputting into that session. So I'm going to do a couple more slides and then hand over to Toby, if that's good. I can see him.
Thanks, Naomi. Bye.
Thank you so much.
Thanks, folks.
Right, I'll just share my screen and do the last few slides, and then bring Toby in. Hopefully my connection will be a bit more stable. It's not let me down yet, but it seems to be struggling a wee bit today. So I just wanted to touch on a few little bits around next steps and actions. What we've touched a little bit about investment readiness, and I'm going to just talk a little bit about that now. So what was really interesting to me when we heard FlyCup talk was, I mean, it was obvious that social impact and keeping that kind of consistency for trainees was really there. It thread through all their work in terms of looking from their qualifications perspective to wanting to make sure that the project remained consistent and they were managing change on behalf of their trainees. So the social impact was there. I think I've just finished by talking about the kind of the governance side. So often we found that one of the biggest barriers to taking on social investment has been a real nervousness of the board. And when we talk about getting investment ready, we look very much at not just the people skills in terms of the staff, but very much the people skills in terms of the governance and what they're bringing. One of the other key areas, and we've got kind of the 6 key areas that we talk about, is obviously the products and services. So again, we'll come back to this at the end when we look at the kind of food and drink service industry. Is actually, you're not going to get people coming to use your facility if actually you haven't got your basic products and services right. So it's really important, again, that in terms of helping organisations look at what those are, we will be looking about whether there really is a market for what they're saying. We will be looking for some data based on past history. We will be looking at some of the issues around kind of marketing skills. And when we look at the business planning and sales and marketing, again, just my experience of being in the kind of the third sector and social enterprise sector for a long time, is there's actually sometimes a real nervousness around that sales and marketing aspect for some organisations. And you see it particularly, I think I've seen it in the past in terms of people's budgets. They're very much focused on a social outcome and don't want to overspend on marketing budgets because it's seen as a waste. But, you know, without really having that focus on how you're going to actually draw customers in terms of that product and service model, then you might struggle on the earned income, which is obviously critical in terms of repayments and loan finance. And one of the things we touched on with FlyCup just at the end around financial controls, I think I started to talk a little bit about that, kind of making sure that at the point when you're looking to take on loan finance, you're not just measuring your financial information based on a spreadsheet or a number of spreadsheets, but actually you've got proper systems in place for managing bad debt, you've got systems in place for knowing what your real cash flow is and being able to understand that forecasting. So what we did at CIS is we actually, if you go onto our website, and I've put the links here within the slides, we've got we call it a diagnostic tool. So taking those kind of 6 key categories of social impact, governance, products and services, people and skills, business plan and financial controls, we ask a few questions, and you can you go through the diagnostic and come up with a bit of a score so that it gives you a sense of what are the areas that you might want to put a bit more focus on and what are the areas that you're strong in terms of being able to look at raising investment. And I'd really encourage you to use that tool regardless of whether you're planning on applying for investment monies. I actually think it's a really good way for any organisation to do a bit of a health check on their organisation, even if they're just looking to apply for more funding. So I'd really encourage you to use that diagnostic tool. You can, at the end of going through that, send your details into CIS, but you don't have to. You can use it very much just as a personal diagnostic tool as well. And then, given this focus on this session was very much around food and drink services, I just wanted to touch on some top tips that I'd picked up in terms of your business plan for this sector that I, having spoken to both our investment manager and indeed to people in this sector, they felt was absolutely critical for food and drink services. So having the right food, the right location, and really knowing your customer is critical for this industry. I think the comment I had, which we talk about in terms of the service and training, is you could have great food, but if you've got really terrible service, people may never come back. And actually that leads into that big question around staffing levels. And again, it will probably be different for organisations like FlyCup, where you're managing it as a training space as much as just a retail customer orientated space. But the understanding that staffing levels are probably one of your biggest costs, but could be your biggest asset, and how you get the levels right so you're neither overstaffed, which means that your costs are too high, nor are understaffed, which means your service is too low. So really, if you're looking to set up enterprise in this area, thinking about kind of staffing levels and that element of the right food for the customer and linking that with service will be absolutely critical. And we've got a little video again, that I've put the link to here, that CIS have prepared just on looking at a business plan for a loan application. So if you click onto that link, you'll hear Alistair talking really about, obviously this may depend, the detail you go to may depend on whether you're applying for the 1.6 million or the £10,000. You know, you would expect different levels of detail, but it gives a little bit of advice around the kind of things that we would be looking for in that. And then I'm just going to pick up on the last couple of points around investment partners and the process. So I think when we heard Fiona speaking, we talked very much about that kind of relationship based, and I think you'll have picked up from the presentation that there was very much the investment manager was with them all the time, understanding when the hiccups were coming, keeping that communication going, which was critical. And I just wanted people to kind of almost try and come up with a framework about how do you choose the right investment partner. So I guess, you know, when you're looking at loan finance, everyone always starts off obviously with the cost of finance and the rates that you're offered. And of course, you're going to look at that. What are the different interest rates that different providers may offer? But then the question that always comes to me is, what is it that you're getting that goes beyond just the cash? So where does that relationship come in? Is it that you're getting additional access to business support? Is it you're getting that one-to-one relationship in terms of perhaps almost a business mentor and confidant as a consequence of who you are looking to raise social investment from? And just understanding it in that broader context. And I bring that in line with that kind of question around business volatility. We're all looking at projections in the future, and we're all building our cash flow projections based on the best knowledge that we have, our experience, and, you know, looking at what it is that we're doing to really invest and grow our business moving forwards. But I think we would all say it's incredibly rare for a business plan to follow exactly the predictions that we always make. And there are always some changes, new opportunities that arise, or perhaps sometimes opportunities that you perceive that don't quite happen. So I always think it's worth thinking through where the volatility in your own business, in terms of, are you with a provider that has that sense of flexibility and coming on a journey with you? But I also get people to think about volatility from the lender as well. And I guess it's always very easy to go back to the kind of the financial crash of 2008, but actually understanding that in terms of business approaches and the thing about relationships and having someone that's really on a journey with you is you're actually in that together. Whereas actually sometimes we all know that the bigger organisations that you may go to, perhaps, you know, you're a customer number rather than Naomi Johnson, and just understanding some of that in terms of the relationship can be really important. And I guess the last bit I've put on this slide about choosing an investment partner is choice. It's often said, I think, to us that, but I can get money much cheaper on the high street. And I guess the question is always, can you? You know, at what point are you being offered the rates that are advertised, and will people actually say no? So who will actually say yes to you? So to some degree, you need to kind of look at your investment partner list, but then work out what their response would be. Do they understand the risks? Do they understand your business? And would this ultimately say yes? So once you've got to that point, and again, this is kind of the CIS process that I come on to now a little bit, but certainly when looking at social investment, it's very similar for all social investors. So the application process, it will generally start with a conversation. It will start by a phone call in the case of CIS. So we deliberately didn't design particular application forms. We wanted it to have that very strong relationship basis. And again, that video link will talk you through that a bit more. So it starts with that conversation, and then you develop your proposal alongside an advisor, the investment manager. So they will ask questions, you'll be looking at your system, it will be working through that business plan. And at that point, it would then get considered by an investment committee. There's never, I guess, often when we apply for funding, we're either told we've got it or we haven't. In the case of looking for a social investment, it could be that it was approved, it could have been declined, or it could be that someone goes, well, we can, but we still need to see more evidence of this, or we need you to be in this position, so it just needs more work. So again, just thinking that through in terms of responses. So that was kind of the basic run through from me in terms of social investment. I'd encourage you to look at any of the video clips that are through. And I'm going to hand over now to Toby, who's going to take us through the community shares model. And again, we're going to touch on some case studies particular to this sector as we go through that. So I'll stop sharing my screen, Toby, and hand over to you.
Thank you very much. And just while I'm getting my screen up, I'll introduce myself. I'm Toby Sanderson. I'm from Community Share Scotland. I think actually looking at the attendees list, I've actually met most of you, but for anybody watching the video, I am one of the programme officers with Community Share Scotland. So for my presentation, I will be giving you a very quick introduction to community shares, what they are, how they work, how some communities have used them in the past, and a bit about the sort of governance and legal structures that you need to have in place to do this, and also some information about Community Share Scotland and the support that we can offer if you want to kind of look at this further. So community shares at their most simple are a way to raise money for community projects. It is asking people who are part of your community and support what you do to put their own money in to support your project. So in many ways it's a form of crowdfunding, which people might be familiar with. Unlike in other forms of crowdfunding, the money isn't a donation. It is money that the person is investing, and the idea is that if everything goes to plan, the person gets their money back, and they might also get some interest in some examples. So this is a really flexible form of funding and finance. What we've seen a lot of in Scotland is a lot of community shops and pubs, and especially rural businesses using community shares. We've also seen community buildings like arts centres and things like that. In the early days of the programme, we saw lots of renewable energy projects, and we've also had some sort of unusual things like a community-owned distillery up in Dingwall. So really anything you can make a business case for can potentially be funded through community shares. So some of the key facts about community shares: they can only be issued by a society, so either a community benefit society or a cooperative society, and I'll say a little bit more about those on the next slide. Another key point is that people who buy shares become shareholders, and shareholders are considered members in the organisation. So both those types of society are membership-based organisations where the members have certain voting rights. They can stand for election to the management committee, and they can vote for who is elected to the management committee. Those votes tend to work on a principle of one member, one vote. So regardless of how much money somebody puts in, how many shares they buy, whether they put in £100 or £10,000, everybody has an equal voice, and it aims to be democratic and to be really community driven. One of the sort of key distinctions between community shares and private shares, as you might be more familiar with them, is that community shares are non-transferable. They cannot be sold on for a profit. If you buy a share, all you can do is withdraw it from the society. So you can go back to the society and get back what you paid for your share. So the share can't go up in value. If you paid £100, you'll get £100 back, possibly having received some interest in the meantime. So community shares are a great way to raise money in their own right, but they're also a really great way to attract additional funding. So we see a lot of groups who use community shares for what we tend to call the sort of last piece of the jigsaw. In some cases, the community shares aspect makes up as little as 5 or 10% of an overall funding package made up of, say, grants and loans and other forms of income. And community shares can really help to strengthen an application to a grant funder or a loan provider, because it shows that your community not just believe in what you do, but are actually, believe in it enough to invest their own money. So a community benefit society, I'm speaking specifically about community benefit societies here because that's what we've tended to work with in Scotland. You can also be a cooperative society, and I'd be happy for anyone to contact me for more information on cooperatives specifically. But looking at community benefit societies, which are very similar to co-ops, the key difference between them is that a co-op really exists for the benefit of its members alone, whereas a community benefit society has to demonstrate benefit to a wider community. So both those types of society are registered with the Financial Conduct Authority, and they're governed by what are called sets of rules. Those are very similar in practice to the sort of memorandum and articles of a company or another type of organisation. They're a little bit more prescriptive in places around membership rights and things like that. So what tends to happen, because the process of registering your own rules with the FCA would be costly and time consuming, groups tend to access what are called model rules, which are essentially templates that are put forward by sponsoring bodies. They're pre-approved by the FCA, and they're really ready for you to drop your information into, and it speeds up the process and it makes it much cheaper. There is a small fee involved in registering a society, so you would pay a fee to the body that you get your model rules from. That tends to be between £200 and £500, and you would pay a fee to the FCA. Depending on how many changes you have to make to those model rules, you would pay a fee of up to around £200. So total cost of registering a society tends to be around about £500. So community benefit societies are really well respected forms of community governance now. They're named in the Scottish Community Empowerment Act. They are compatible with things like community right to buy, with community asset transfer. They are eligible for really every major grant funder that I'm aware of, eligible for things like Scottish Land Fund, for National Lottery, anything like that. And they can also be registered as a charity, so you can have charitable status as a community benefit society. So you're really getting all the rights and protections that a company would have. You have the same ability to employ staff and anything like that. The key advantage is that you have this ability to offer community shares, which other forms of governance can't do. If you are an existing organisation who's looking at maybe issuing community shares for a specific project, say for example you already have a SKIO or a company limited by guarantee that's set up for another purpose, you have a couple of options there. You can either convert your existing organisation to become a community benefit society in its own right, or you can retain that existing organisation and have a community benefit society that sort of sits alongside it. And that can't be a subsidiary. The society can't sit as a child of the existing organisation, but you can have written into law links between the two. So you can have agreements that they will, for example, share directors, and that they will have agreements about profits passing from the society to the existing organisation. And that's something that we've developed with our colleagues at the Development Trust Association, particularly looking at where we do have development trusts and other community anchor organisations who are maybe taking forward multiple enterprise and projects within a community, where a community benefit society is a good vehicle for a specific project. But those rules are accessible to anyone who they would be suitable for, and happy for anyone to get in touch with us to learn more about that. So I've got a case study here. Because the theme today is food and drink, I've chosen a case study of Scotland the Bread. Scotland the Bread are a charity set up to promote the use of heritage grains of wheat. So they are looking at using grains of wheat that are native to Scotland, that have kind of gone out of common use, particularly in sort of mass processed bread that you might find in the supermarket. And the reason they're doing this is mostly that it's more nutritious, it's better for the environment, it's better for people, and they want to encourage people to start thinking about having sort of healthier approaches to food. So they raised over £30,000 in shares. They were set up with a set of model rules from Co-ops UK, who are the UK-wide organisation to support cooperatives and also societies like our own that we're speaking about here. And those are charitable model rules. So this society is also registered with Oscar as a charity. So they're a social enterprise that's set up now with a sort of training program, teaching people how to bake with these particular grains. They mill their own flour, which you can buy on their website, and they also do some local bread making of their own. For them, like for many groups that we work with, community shares were, like I said, part of a bigger funding package. They also received grant funding from, I think, Esme Fairbairn, and possibly from the Robertson Trust, and a couple others, I think. And also, interestingly, for today, they also received some social investment loan finance, not from Social Investment Scotland, but from another lender. So they've been up and running for a while now. They have had some sort of setbacks. Unfortunately, one of the sort of key people who was leading this unexpectedly died, and I think they had a bit of a setback from that, but they're kind of finding their feet again, and they've just moved to new premises in Fife, and really quite exciting things happening. So do check them out if you're interested. So Community Share Scotland, we were set up in 2014 with funding from the Scottish Government and the National Lottery to raise awareness of community shares in Scotland, promote the use of community shares, and I think most importantly to deliver real hands-on guidance for groups who want to raise money this way. So we sit within the Development Trust Association. We're part of that team, and we have access to all the support that they offer their groups. We also work closely with the other team within DTAS, which is the Community Ownership Support Service, who can offer advice around community asset transfer and taking ownership of buildings as a community. The support that we offer, we have a team based in Edinburgh who do the sort of early stage support with you. So we would be the people that you would speak to initially. We would help you work out if community shares are a good, viable option for you. If we both sort of decide that yes, this is a good, sensible way for you to go ahead, we can then bring in funded consultancy support. So we would match you up with an experienced community shares practitioner, somebody who's done this all before, who knows how to put together a share offer, and we would fund up to 6 days with them to help you to really put your plans together, focusing on those 4 key areas you can see. So firstly, business planning. We don't take groups from a point of having no business plan to having a fully all bells and whistles business plan, but we would usually take you from a point of having a reasonably mature business plan already and working in the community shares element of that. We would also look at your community engagement with you, so helping you to think about who might buy shares in the society, how you might reach out to them, how you might convince them to invest. We would look at your governance with you, so particularly around issues like registering your society, applying for charitable status if you need it, anything like that. And ultimately all that comes together into your share offer document, which is the document that goes out to your community and hopefully gives them all the information they need to decide whether or not to invest. We can also offer a grant of up to £5,000 to help promote share offers. So that can be used for any costs of marketing associated with a share offer. In the past, obviously not happening so much just now, but in the past most groups have used that for launch events. Most groups have used it for the design and print of share offer documents, but it's a very flexible fund, and we're happy to speak to you about ideas on how you can use it. And we work really closely with other organisations in the third sector. So we do lots of events with CIS. We work closely with the Blunkett Foundation, who support community shops and community pubs. We work closely with the Cooperatives Development Scotland, who also offer a lot of governance support. And we will always signpost groups to all the support that's available. So, if you come to us early on, you're not going to preclude yourself from getting other support. We'll help you to make sure that you get all the support that's available. And perhaps most importantly for most groups is that everything we offer is fully funded, so it comes at no cost to organisations. That is really the end of my presentation. I think that's flown through quite quickly, but I am happy to take questions now. I will also just say that's all our contact details there. We have a brand new website launching next week, which will include a sort of step-by-step exploratory tool that you can use to look through the various steps of the community share offer, and the idea with that is to make it a lot more accessible to understand the process of how this all works. So that's going to launch the middle of next week, so it'll have that tool and it'll have lots of case studies of the groups we've worked with, so please do check it out if you're interested, and I'm happy to take any questions now. Thank you.
Thank you, Toby. It was interesting again, I think in the case study you just shown us, you were talking about kind of how actually they'd had funding, community shares money and social investment. So it's very much that kind of blended approach that really came through in the case study.
Yeah, and I think that the majority of our groups do have a mix. We do have some cases where it's 100% funded through community shares, and that's totally valid. But I think most of the groups that we work with, it's a mix of various funders and sources, which works well.
Brilliant. And I'm just wondering, just in terms of perhaps a couple of questions. So one of the things that's always struck me about the community shares model is obviously it's both that and I guess more general crowdfunding, but it's a really good way of organisations almost being able to then show and demonstrate that they've got the community on board with them. How do you think that helps them, not just from a financial sense, but in terms of their organisation on the ground and also how it's perceived by others?
Yeah, so I mean, I think that there's two bits to that. There's the value of how it looks to funders and to outside people, but also there's the value of just building that community. And we've had a lot of groups who have issued community shares where it hasn't really been about the money, it's been more about building membership and about giving people a sense of ownership. So a really good example of that is Bridgend Farmhouse in the south of Edinburgh, who have taken on an old derelict farmhouse that used to belong to the local authority, and by the time they issued shares, you know, they'd already taken ownership of the building, they'd already renovated it, they were already up and running, and they didn't desperately need the money, but they wanted to give people a chance to invest, and they wanted to give people a chance to feel like this building really belonged to them and that it was theirs to do with as they needed. So I think there's a real strength in that ability to engage with your community and to build up membership.
No, it's a different take, I think. I think I started at the start of this presentation talking about kind of ownership and control, and in some ways, you know, it's not the reverse of what I was saying at the beginning, but it's kind of a different way of looking at ownership and control for very community-rooted organisations, I think, and being able to demonstrate that. So definitely an interesting perspective, I think, to look at.
Absolutely, yeah.
What could you just touch perhaps a little bit on kind of the difference between just general crowdfunding and the community shares model? Just
so I mean, I think I would say that community shares falls under the umbrella of crowdfunding. There's really kind of 4 different types of crowdfunding. So you start with donations, which is maybe the one that most people are most familiar with, which is literally just people giving money because they believe in something. So that's quite often for charities. You know, you see Just Giving pages, and recently we've seen a lot of businesses that have maybe been struggling to stay afloat who've asked for donations. That tends to be relatively small sums of money, so maybe people putting in £5-10 each, and raising maybe just into the tens of thousands. It depends really. Then you get into rewards crowdfunding, which is where people put money in and they get something back. It's maybe not always completely par the value of what they get for what they put in, but you know, you might get things like a t-shirt. If it's in a pub, you might get a free pint of beer. In some cases you get the sort of Kickstarter model where you're essentially pre-ordering the product that's not in production yet. And that starts to get into bigger sums of money. And then you have debt crowdfunding, which is sometimes called peer-to-peer lending, and you have equity crowdfunding, which are when you get into really big sums of money, and those tend to be more regulated. Community shares is kind of a form of equity crowdfunding, but it sits in a slightly different space, and it's less regulated. Community benefit societies are exempt from a lot of the regulations that companies would have to adhere to. So you can start to raise a lot more money, and I think the impetus for someone to invest, people are attracted to put in bigger sums of money in some cases. In some of the projects that we've worked with, not all of them, but in some cases you have people putting in thousands of pounds because there's some financial return as well as supporting something worthwhile.
Yeah, I know. Obviously, we've done these sessions based on sector, but I know when we come to look at things like land and energy, certainly the kind of community shares model for some of the energy-based projects has an element of financial return, which, albeit is still low and capped, considering where bank interest rates are at the moment, is probably still quite comparable for many people.
I mean, it's quite interesting. I think in Scotland we've tended not to see big interest for community shares. I think for the energy projects we have, it's usually been around 4 to 5% a year for the renewable energy projects. But we have a lot of groups who have issued community shares and haven't offered any interest at all. Whereas in England, I think it's quite common to see 3 or 4% for most projects, even for community pubs or that sort of thing. It is a little bit more of an investment for people, which is not entirely sure of the reasons for it, but there's quite a mix.
Yeah, no, it must be interesting to do some of that comparison, I think. So that was really useful. I think it's always interesting, I think, for people to understand where it fits from that kind of, not just within the financial mix that we've been speaking about, but also that link to the broader crowdfunding approach and just understanding it. And it was really good to hear that there's lots of support there for groups should they want to get more support from Community Share Scotland. We know it's there, which is brilliant. So yeah, good to hear, and thank you for giving us that overview today. It was brilliant. So I know Toby's joining us at all of our upcoming sessions with different case studies based on our themes, much like we're doing, talking about the model, but also giving us some really good examples of when it's been used. So thank you very much, Toby, for joining us today.
Thank you.
I'm just going to finish off by just sharing showing you what's on the last couple of slides that we've just prepped together that will get sent out to people coming along today, just so you've got a sense. And then if there's any last questions and you want to pop them in chat or send me a quick message, then just fire them through. And I will just share the last few little bits of slides. Oh, so I've just put on our contact details there, but I just wanted to point out a last couple of initiatives to people on these last slides that we're looking at here. So I've put some useful links there in terms of other places you might want to go to for support. There's lots of resources now on the Social Investment Scotland website. So we've been doing lots of webinars recently with kind of sector experts from legal and finance backgrounds, from charity backgrounds. So I'd really encourage you to look at some of our expert webinars. And we've got some sessions coming up around ambitions leading from recovery, so you can apply for those sessions in terms of really trying to work with organisations that are really trying to be bold as they come through the recovery process. So go onto the CIS website and you'll find out more about those. And then later in the year, we also run what we call our Retail Academy, and you can find out more about that. And actually at the Raising Investment session we're running next week, we've got Rachel who convenes the Retail Academy for us, talking a bit about that. And there's lots of great tips and information that you'll get from joining that those sessions moving forwards. I've shared the Community Shares email as well. The Good Finance one I touched on earlier, if you want more of a background on social investment and want to find out about other providers, and that's a really useful site to go to. It covers all of the UK. And then just the one I want to point out for Scotland, Resilience Scotland tend to do a mix of loan and grant, a blended approach, but they do that covering 13 local authority areas, the ones with the highest rates of deprivation they focus on at the moment. And then I've just shared the links lastly to Just Enterprise and First Port. So Just Enterprise is really helpful out there for organisations that might want some broader business support advice, looking at business planning. So I'd encourage you to look at what's available there. And they run lots of online sessions now around financial planning, business plan writing, all sorts of sessions that they've got, marketing, moving to digital. And then First Port, we often highlight their Launch Me initiative, which is another one that helps people raise investment for early stage projects. And then I just wanted to bring social investment tax relief in. I know sometimes this fits when Community Shares have kind of been looking as well in terms of people being able to put money in. But I would say that the social investment tax relief programme is due to close at the moment in April 2021. There's a campaign to keep it available. So if you want to find out much more about social investment tax relief, I'd encourage you to click on the links given here with Big Society Capital. And then just to let you know the little bits of extra slides I've put in for you when they get sent out. So I've tried to highlight a few of the benefits around looking at social investment and loan finance rather than a funding approach. But obviously, to be fair and to make sure that we're giving you a balanced approach, obviously raising some of the issues around challenges. And again, I've put in a link to the video that we've just prepared around personal liability, because we know that's one of the big questions that trustees and boards often ask. And then lastly, I think when we were talking earlier, I highlighted the diagnostic tool that we have on the SIS website. And I've just pulled in a few of the kind of key questions that each of those sector areas, social impact and governance here, products and services, people and skills, and business plan and finance control system. So they're just examples of some of the questions that diagnostic tool really gets you thinking through, that I just thought would be helpful just to summarise on a slide at the point when we send them out. So they'll be going out following this session, and unless there's any more last questions, that's it from us today. And we're back next week. I guess similarly linked, we're looking at raising investment for trade and digital retail, and we're actually joined next week by Locavor, which is a social enterprise supermarket in Glasgow, and Brewgooder, who I guess produce beer and lager to fund clean water projects predominantly in Malawi. So again, two really interesting presentations. So our format next week will be slightly different with our two case studies, and we really look forward to seeing you then if you want to join us and find out more about that. So thank you for today. Thank you, Toby, and I'll be here again next week with Toby.
Thank you.
Thank you.